Hello, and welcome to Trading with Malachi, with me, Malachi Kelly, author of The Hidden Wealth Blueprint, which teaches you how to model the wealthy to become wealthy yourself. So, today is the 4th of December 2018, and we're just having an overview of our positions that have opened on previous days. So I do have two Forex trades open at the moment, one on Euro USD, currently at $7 profit, and GBP USD, currently at $27 profit, but it's moving up and down. We'll jump into the charts in a minute. Just want to do an overview of how our stocks performed yesterday. Apple has gone from minus 35 to plus 20, which is great news. Facebook is up at $60, Shopify is up at $80, and our crypto plays are still negative. So we'll see. We might see these come back over the next week or so, but it's good gains on our initial portfolio. We're up overall $247, but we've got a lot invested in our stocks, which in essence is like a savings account. Because what you want to do is you want to make your money on a day-to-day basis on Forex, and then invest that money into value stocks, so your money can work for you over time, rather than just sitting there. At the moment, I've got $300 just sitting there doing nothing. It might as well be in my bank account doing nothing. But if I've got it in stocks, then I've got potential to make a better return on my money than in the bank or in an ISA. We had a trigger yesterday of our McDonald's price. So in essence, we need to look at this chart to see where we would like to have an entry. As you can see, I've got my entry at 183.50. So let's have a look at that quickly, and then we'll jump into the Forex charts. So let's move it to the watch list. McDonald's. So as you can see, I want to jump in at 183, which is down here. And the reason why I don't want to just buy it now, because I've seen it go down and down and down and down. I want to get in. It's a great value stock, but we've seen price come down to these levels before. So what we're trying to look for is a place of reversal. And as we've seen multiple times, these DP and R1 are levels of where we'll see a potential reversal. I mean, if you draw this line, I will draw this line back, and if you look at previous price action around this level, you'll see it hold up or break through and hold up at this level and go from 183 to 190. Also on this downtrend, when it was coming down, it also was held up at 183. So 183 may be a great place for this market to turn round, and that's when I'd like to jump back in the market. But again, I can't look at all of my stocks every day. So what I do is that I place an alert in the market for a break of our 100-day moving average line, to then have a look at that chart and see where I can jump in and make a profit on that stock. Again, stock plays are going to be held for maybe 2 to 3 months. So you don't have to get it as right as Forex, because as you've seen, I saw quite a few days of down on my initial stock plays before they started to make a profit. But ideally, what you want to do is you want to be in and out of stocks every 3 months and have maybe 50% of your balance invested in stocks and shares, to make sure that it can make up for any losses that you make on Forex. So let's now jump into the US dollar chart and see where the US dollar is. So it's great to know that this is the first day of analysis, so we can always go back to day one. So day one, we had this big downtrend down to DP, and then we saw it move up and break our average lines go back up to S1 and then reverse from S1, and this gap in the market was the weekend. So although you can't trade on the weekend, people are obviously spending currency and exchanging it across the world. So the market still does move, and then come Sunday night when the market opened again, there was a massive gap, and it subsequently sold off back down to S1, and then back up to DP, and then back down through S1 again. So if you then look at this move, yesterday I was saying that this uptrend could go up and hit our 61% 8 fib and sell off, which it has done. Charts generally are quite predictable. They move in a predictable fashion. When they don't move in that predictable fashion, it's potentially when you lose money. But 60% of the time, you'll see the chart move in this predictable pattern, which you can capitalize on and make profits. So let me ask you a question. If you were trading at this point and you've seen the US dollar come down to levels where it's rocketed in the past, where do you think price is more likely to go today? I mean, as you've guessed it, price is more likely to go up today than it is to go down. Now, it may still go down, but the highest percentage move is up, and at least challenge our moving average lines today before a further move down. Because in essence, we are moving in this channel between here and here. This is the top of the channel, this is the bottom of the channel. As long as you buy here and sell here, you should be fine. Our stochastics at the moment, very overbought and looking like a reversal pattern in process, and our last hour candlestick is green, looking like we're going to see a reversal on this market. Now, with that said, I've already started placing trades in the market to capitalize on this strong dollar, and let's see if this strong dollar plays out throughout all our charts. So the first one is our GBP USD. As you can see, my trade is up $20 so far, and as the dollar goes up, the GBP USD goes down, cable goes down. So we have seen a lower low and the market make lower highs, which indicates a downwards trending market. Our stochastics was oversold and now moving back into the neutral zone. We should see this market continue to move down until we reach down here in the stochastics, and a reversal is imminent, which may mean we see a touch of this previous low before a return back to our average line. Remember the elastic band analogy. The market is relaxed and it needs to stretch before it bounces back. Again, it's very difficult to work out where price is going to go before it bounces back, but if we use past performance as an indication of where price could retract, this would be our first point of call. We would take some profits off the table at this point, and then potentially allow it to go down even further to jump out at this point of the market. But we'll have to keep an eye on this position today to make sure that it keeps moving in our direction. And again, as our US dollar keeps to increase, we'll be happy with the direction of this trade. So let's jump over to our next chart, which is the Euro USD. Again, we are outside this channel. Let me zoom out so you can see the channel again. Yesterday we were here and we sold it back in this channel for a $200 profit, and we have now made a new high again. But as you can see, we are at similar highs as we have been in the past. Let me draw a line here so you can trace this back and look at previous resistance. So as you can see, this line acted as resistance back here in the past. We saw that a sell-off here on Friday, a sell-off here on Monday. I'm expecting a sell-off here again today, at least back to the top of the channel. Now, if we are going to see this reverse, And this downtrend that we're seeing this pull out of this downtrend, and this our whole trading proposition reverse, and we start buying euros and GBP rather than selling moving forward. We'd first need to see this channel reject a price or a candlestick into this channel before we change our bias on which way the trend is going. Remember, the trend is our friend until proven otherwise, and at the moment the trend over the last couple of days has been moving downwards. So what you want to do is you want to sell at the top of the channel back down, because that's our highest probability trade. Now let's move over to our next chart, which is the Euro JPY, and what we want to look for obviously is correlation between our euro. To see that our euro is going in the right way, we want to see a weak euro, because a weak euro will mean that price will also drop off here, as long as we see a strong dollar. We are seeing a rising dollar, and the euro versus JPY is also looking very weak. It's got up to this 128 level, and we've moved back into this channel. We were trading above this channel, and then we moved into the channel, tried to come back out of the channel, but we're seeing challenges being rejected on the half-hour timescale here, 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 and here. So we should see this carry on going down and potentially make a similar low or even test DP. Again, the most probable outcome is that it will test DP before subsequent rise up, because we are not that far out of oversold, but we may see a return back into this area before a subsequent increase in price. I'm not trading this market because the risk reward is very small, and stochastics is not in the right place for selling the euro versus the JPY. The risk reward is too small compared to Euro USD, where we've got this gap between here and here to capitalize on, and GBP USD, where we have a gap between here and here. Let's look at our USD JPY to see if our dollar market is going to strengthen against the JPY, which would then validate our trade plan and give us more confidence that the market is going to move in our direction. So we are seeing a cross on our average lines on the 30-minute chart on the USD JPY. So potentially for the later on session, we may want to place a major cross trade. I'll go through that with you so you can see what trade you can put on later. But for now, what we can see is that stochastics is oversold, and reversal is imminent. We're seeing a hold up of this level. If we go back in history, have we seen this price hold up in the past? So it was a while ago now, back on the 21st, 22nd of November, when we saw price at this level before, and we did see it hold up at this level and go down before a challenge and break through to go higher. So this potentially is an area of support where price could potentially come back up to our moving average lines. So we'd see a correction in this market. But let's look at where we can potentially make a trade in this market, and how we would do that and trade a major cross signal is that we want to track where this market is going to pull back to before we want to jump in and sell this market. So we want to sell this market when stochastics is back above overbought. So at the moment, it's now not got a right time. We need this market to climb up to a point where we jump in. And the way that we work out how to get that level is by using something called Fibonacci. You can check on my other videos where I go through Fibonacci in more detail, but I'm just going to show you this briefly in our overview video today. So what you want to do is, when you're drawing your Fibonacci lines, is always to draw them from left to right. So in our case, it's a downtrend. We want to draw from high to low. And we want to draw it from the place where the cross started. So the downtrend, the sell-off, started from here and went down to here. And then we are then drawn our Fibonacci retracement lines. So generally, when you see a sell-off or a buy in the market, but we talk about a sell-off because this is what we're seeing today, is the market sells off. So people are selling through DP, selling. So you can imagine their stops are somewhere around here. They're selling. And then it's hit a level where they no longer want to sell. Now what may happen is that some sellers will hold their position for this correction and further move downwards, or some sellers will close their position at this point, which will create a retracement, because when they sold up here, they need to buy down here to close their position. So this retracement is just people collecting their profits. So generally what we see is this correction go to 38.2, 50% or 61.8% fib before sellers decide that it's time to get back involved with this trade. So what we want to find is, we want to find a level of possible resistance above the 61% fib where price might go when it pulls back. So in essence, around about 113.40 is where price may pull back to and still be inside its average levels before a further move south. Now this might not happen until at least 2 o'clock this afternoon, getting up to this price. But if we get up to this price, the market will be really stretched and looking for a reversal to happen. And what we can do is we can get an order into the market at this point and go away and perform the rest of our day, and not have to watch the charts on a daily basis. And these are some of the best trades that I place on the market on a daily basis. But this, again, I say daily basis, this pattern doesn't appear very often to give you a good risk reward, which allows you to get 2 or 3% from the market. So what we want to do is that we want to place our stop in a place where if it breaks these levels, then our trade plan is invalid, and thus we want to be getting out of the trade. So as you can see, if we placed our stop at 60 up here, which would be above DP, above the moving average lines, and above the previous high which created this cross. So if price does get up to 113.60, then this would invalidate our trade plan, because we'd expect price now to move even higher and we'd need to get out of the trade. But if price reversed anywhere in this area and then challenged this low area, we'd be getting out of this trade for a very good target. And I'll show you that now. I'll put this trade on, put this order on in the market. So we want to do an order, not trade the market. We want to sell this market once it gets to 13.40. And our stop at 13.60. So now we're risking $175 if price was to keep go through 13.40, carry on going to 13.60, and we get stopped out, we'd lose $175. However, it would have to break through DP, our 100-day moving average line, and our 50-day moving average line, and make a new high for us to get stopped out. It's very unlikely that price is going to do all those things. And that's why the major cost trade has such a high percentage win rate. Now, we've established that we can go down to 13.17. I think I've got my stop line wrong. I think it's 13.02. I'll go back and readjust that. But if we challenge our lows, then I'll be making $335 on this trade. So I'll set this order. Yes, it's 13.02. So we're risking 175 to make 335 if price does move, price us in, doesn't make a new high at 60 up here, and then sells off. We'll be in a good profit for today. Let's go back and see how our trades are performing for today. So our GBP trade is up $13 and our USD trade is up $7. Let's have a quick look at our overall performance. So I just want to talk about this quickly here. It's $493 loss. Now this really hurt me, and the reason why I had this $493 loss was an oversight by me. What happened is on Friday I had a trade open which was at a profit of around about $70, and I was like, I'm not sure if I should close it. I don't really want to hold the position over the weekend. I'll do it anyway. So I left it open over the weekend. Worst mistake of my life, because you've seen that gap in the market that happened on Sunday night, and that is what happened and made me lose nearly $500 overnight. So this is a lesson learned. I'm no longer going to leave positions open over the weekend, because if that gap happens, it in essence misses your stop, and then obviously takes you out of the trade wherever price is once market opens. That could be 50, 100, 150 points away from your stop loss, hence making me lose a huge portion of my budget. Now, subsequently, when the market's opened, I've then had to try and claw those losses back. Thankfully, my stop plays have started to gain fruition and help me claw back this loss. But it was just an oversight of leaving it open over the weekend. But as you can see, we've got $200 win there, $70, and then some small break-even trades at the end of the day yesterday. Today's a new day, so let's see how much we can make today. Our two trades that we have today this morning are already showing a profit, bouncing around break-even at the moment. It's $20 plus break-even. Based on our analysis today, we should see price move down quite nicely, and cash in at least $300 today before we see that uptrend. Sorry, before we see that uptrend to our USD JPY position that probably will trigger at the start of the US session at 2:30. I hope you've enjoyed today's analysis, and I'll see you guys tomorrow. Happy trading, and thanks for listening.